It's Chris Luno and the Fine Deep House Mix.
All right, welcome everyone to this lovely Friday evening. Welcome guys, welcome. Let's look at your comments here. Do nothing, you said CPI data insane. Yeah, I mean it was an insane data, and we'll be talking about it tonight. Adriana, you said happy Friday night. You don't need to go clubbing when Charts Focus 1 has the music online. Yes, you're exactly right. But hey, you know, if you want to go clubbing on a Friday night, why not, right? I actually haven't gone to a club ever in my entire life, so do nothing facts. Hello. Yeah, so hey, thank you all for joining on this lovely Friday evening. You know, I would expect not a lot of people to be here, since it is a Friday. You know, the weekend is starting, so thank you all for taking out your you know, weekend schedules to join me for this live stream. I hopefully you guys are always learning something new, or at least you know, continuous learning some type of a theory or topic whenever I do these live streams, right? So you know, that's kind of the main objective here when I do my live streams. So hopefully you guys get a nice introspective view on how I personally view the markets, how I you know, am able to, you know, let's say predict some type of trend or etc. Right? So let's go ahead and start. So hopefully you guys can hear me. I'm trying to make my voice as loud as possible. I don't use my mic anymore because it sounds a little bit too muted when I use the mic. So hopefully my computer is capturing everything on its built-in microphone. But if you guys can't hear me due to the music, please tell me right now before we start. Is the music to my voice audio balanced correctly? Just give me a thumbs up or whatever. Or you guys can just like the video if you guys can. If you guys can hear me or can't hear me, let me know. I will turn down the music or maybe put up the music a little bit more so that you guys can hear my voice and the music in the background. You good? Okay, perfect. I hope that's the same. It's a consensus for everyone. If the audio is perfect or not. Just one person saying it's good. Okay, so we'll just go with that and we'll start. So CPI data. All right. Let's talk about what the CPI data came out to be. So we hit a 40-year high. All right, so May's inflation data percentage, was 8.9%. Now, obviously, a lot of people are not believing that number because, well, prices really have been just absolutely skyrocketing for the past few months. And especially since I would say around 2 weeks ago, you guys should have noticed if you're going grocery shopping or even just getting gas, prices just suddenly really just jumped, right? I mean, especially for gasoline. I think in my area, the gasoline for my prices jumped. I think I would say 40 cents for regular, and then for my premium gas, it jumped up. I would say close to almost $1. Right, I think it jumped like 70 to 80 cents. I mean, every cent matters, right, with gas. So, you know, it's really crazy to think that inflation is just at quote unquote, just at 8.9%. Because I would think that it's around 9%, 9.5, 9.3%. But you know, at this point, it's basically at 9%. If you just round up 8.9%. But with CPI data that high. What can we expect, right, from the Fed? What can we expect? Well, as I've already explained yesterday night, if you guys weren't here, the CPI data is what the Fed has constantly been waiting, especially May's numbers, because we saw a drop in inflation percentages from March to April, right? And they're trying to see that because the Fed has already increased rates to 0.25 BP, right? Or just 25 BP. And if you guys don't know what BP means, it's basis points. And so they're trying to see if it had any lasting dent to inflation, and it did for 2 months, right, from March to April. But then May comes in and we hit 8.9%, a 40-year high. So at this point, 100% or even 1,000%, the Federal Reserve is looking to increase their rates by 50 BP. Okay, so in the next FOMC meeting, they're definitely going to announce that they have a consensus to raise the interest rates by 50 BP, and I personally think we're going to get 75 BP by this time. Okay, they're going to get 75 BP by this year, right? Hey, aloha, what's up? Welcome, Andrew, welcome. So, for the CPI data here, I think the Federal Reserve definitely wants to make sure that they're going to look for that 75 BP very, very soon. It could be within the next 2 to 3 months. Who knows, right? Because if inflation keeps on going higher, which I think it will, it's the Federal Reserve will have to admit that a recession is coming, right? Because they've been being very, very careful about talking about a recession, because if they do, they know the equity markets will tank, because the Federal Reserve, right, the central bank of the United States is talking about a recession. That's huge, right? And so they've been trying to make sure that they're tiptoeing around that word, and trying to make sure that they lessen the blow on what they're saying, especially when it comes to inflation and how they're fighting to curb inflation and bring back inflation to the 2% target. So I think at this point, the Federal Reserve is going to have to admit that a recession is around the corner, and next year is going to be really hard on every single American citizen. And we're already seeing increased and record-breaking inflation rates around the world, right? A lot of countries, a lot of developed countries, first world countries are already in the double digits, right? For example, South Korea is around 10.4%, I believe, or it's something above 10%. If I'm wrong, I'm wrong, but I saw that data somewhere. I'm just trying to remember it, but I think I saw something about 10% and above for South Korea. So that's crazy, right? And I would expect the United States to be around that percentage soon, since we're basically at 9% for the month of May. And I sound very pessimistic, but I'm trying to be grounded in reality here, as a lot of macroeconomic factors are really starting to weigh in on inflation. And just based off of a lot of the supply shortages that we're having, and the fact that we can have potential water and food shortages. It sounds scary, because it is, right? Because we're seeing shortages in necessities, right? And if you have shortages in necessities, it's not even a want. These are necessary things that we, us humans, right, need to have in order to have a life, right? And for the fact that we can have potential water or even food shortages, it's just scary, right? And if you guys haven't seen, my excuse me, let me close my door real quick. Okay, so if you guys haven't seen my video on the potential reasons of why the stock market might crash, well, go ahead and take a look at the video. It's in my channel. You know what? Let me actually just give you guys a link here on the chat if you guys haven't looked at it. Let's see. Okay, so let me grab the link. All right. So here is a link to my video. Okay, all you need to do is click on that. Right. So this is the video where I explain why the market's going to crash and potentially have a recession, and also give you guys a solution of how the world will be able to recover when this recession eventually is officially officiated and comes, right? And usually, if you guys don't know how a recession is officiated, well, usually it's defined by two quarters of a decline in GDP, right? So if you guys know what GDP is, it's the gross domestic product. Generally, it's just showing the productivity of an economy, right? And so if you have two back-to-back quarters of straight decline in growth, or percentage in GDP, that usually officiates a recession, and the fact that the economy is pulling back. We're not expanding anymore, right? Because we've had an expansion for the last 2 years, but a lot of people are saying that the last year and a half or so has been artificial growth, thanks to the Federal Reserve's pumping of the economy and the stock market through the printing of billions of dollars, right? So I can agree with that prospect of the Federal Reserve artificially propping up the economy and the market for the last 1.5 years. And so in order for us to retrace that and pull back from that, we need to have a recession to kind of pull back in the economy, to kind of go back to reality, right? And especially as a lot of companies, especially tech companies, have seen inflated valuations, right? That valuations that don't have any fundamentals or valuations that aren't grounded in reality, right? So I think this next recession that comes is going to help us come back to that reality, but there's a lot of macro factors that are pointing out to a recession that we can possibly be in a recession for years, right? And I explained those potential factors and reasons in this video that I've shared with you guys in the chat room here. So make sure you guys take a look at that video. If you guys want to like the video, share the video, and comment on the video of what you think, go ahead and do that. It will really help with the algorithm as well for the videos. So thank you all if you guys do that in advance. But like I said, the CPI data today is just showing exactly what the Federal Reserve has to do. They need to continue to reduce their balance sheet and continue to raise interest rates to completely squash out demand so that people stop spending money. And if people stop spending money, that means the economy is going to reel on the effect of people stop using. There's no demand and there's no usage of money. The economy will pull back. And they need to do that. They need to have a Federal Reserve induced recession. Okay, and I tell my CFO Swing Watch members that I personally want to see a stagflation, and there are signs of a stagflation, which is also a type of a recession. But it's a type of recession where we have low unemployment rates, right? So there's a lot of people who are employed, but there's high inflation. Right? There's a surge in higher prices. Okay, so if you guys want to know kind of what I've told my CFO Swing Watch members, make sure you guys join. So far, has anyone have any questions on what I said so far? I know if you guys haven't joined last night, I'm kind of repeating what I said last night, but it's essentially what I've kind of predicted here, that no matter what the inflation rate is, even if it goes higher, even if it goes down, the Federal Reserve's objective is going to stay the same, because remember, they wanted inflation to be 2%, right, back in 2020, right, when the market crashed and the economy crashed. Except inflation kept on going higher and higher and higher after it reached that 2% target. So their entire objective right now is to lower inflation back down to that 2% goal. Okay, so no matter what the inflation percentage is, 8.9, 9.0, 10.0, 7.5, 6. Whatever it is, any number that's higher than 2% is not going to work for the Federal Reserve, and so they need to lower the inflation rate, right? So that's going to be their objective, right? For this entirety of this year and next year as well, right? That's what I'm predicting, because inflation is going to continue to thrive into next year, I believe, and the Federal Reserve is going to do what they can to continue to try to lower inflation and lower prices for the sake of people's bank accounts and wallets, right? So now, what I think about the equity markets. Well, I think the equity markets are going to continue to go lower, especially SPY. Oops, I did not mean to type in the chat room here. So if you take a look at SPY, right, SPY really hasn't gone down too much, right? We're reaching that 20% downtrend from all-time highs again, right? So we're heading back down into that bear market territory. We ended up around 18.50% to the downside, right? Negative 18.50%. And I believe 3.5 weeks ago, or I would say, 3 weeks ago from this week, we were down 20%, right? We touched at bear market territory. So I would expect next week to touch the bear market territory again and potentially enter into a bear market, because we have a lot of room left to go back to that 350 to around 348 target that I have, which is the kind of the 2021 lows and 2020 highs. So if we're able to go back down to around 350 to 348, I would expect to see a lot more buying coming in. But so far, I'm not going to expect any type of buying in any of this area here, right? So far, right, we've had no buying coming in except this temporary bounce after touching and after retesting a potential bear market, right? If we continue to go down this week, not this week, next week, I'm not gonna see. I'm expecting to not see a lot of buying coming in at the previous low that we made, which was exactly 380.54. So maybe I will see some tiny bounces on a, maybe 2 to 3 trading days, or in maybe intraday levels. But overall, long term, I'm not going to see any type of buying coming in until we come back down and retest the 2020 highs or the 2021 lows. Okay, so anyone have any questions so far to anything that I've said? No? Okay. Well then, for SPY here, long term, this is one thing that you guys do not want to forget from what I say right now today. Okay, long term, all right. I would say if you guys want to invest into something with the market downtrending like this, okay, invest in gold and silver. Gold and silver, right? And here's why. First of all, gold absolutely popped up today, right? And usually when gold and silver are usually the kind of the prime commodities to get into whenever there's an initial fears of a recession, right? You want to get in because gold and silver tend to have a nice run during an initial recession fear, right? Recessionary fears usually tend to end up having a huge effect on main commodities like gold and silver, and we saw that today, right? It was evidence today that a lot of people are scared about a recession. I mean, rightfully so, because the inflation data showed that prices are still surging, even if the Federal Reserve has increased interest rates to 25 BP. So, at this point, the Federal Reserve is going to have to induce recession, right? It's going to be a Federal Reserve induced recession as the Reserve continues to increase interest rate hikes and have a lot more rate hikes in succession, right? A lot more than usual. And we've already known this, right? I said this in the new year that most likely investors and traders are going to be looking at and focusing on how many interest rate hikes they're going to do this year. And it seems like they're going to do a lot at this point due to the inflation rate being so high consistently for the last 3 months. So, at this point, people are going to start crowding into gold and silver. I personally know two family members of mine who have been buying gold bars. They've been buying actual gold bars, right? I went to a store once. I believe it was a coin exchange or coin collectors store and a market, market. And he had a lot of gold available for purchase and silver. And I was actually looking to buy some. And they're worth a couple thousand because they're big bars of gold. They're like, I don't actually remember the weight of the bar of the gold that they had, but it was pretty big. And I might just have to go back there and actually try to buy some gold because it might be a worthy investment for the next year or so. So who knows? If I get a good a good price for those gold bars, I might be able to sell them at a nice profit next year or even the next 2 years as gold and silver starts to fly off. Okay, so that's one advice I have for you all: buy gold and silver. Okay, especially gold, since gold is the kind of the safe haven, right? The conventional safe haven for long-time investors, especially when recessionary fears are being spread around the globe, and especially if a recession does come, right? This is where people like to store their cash into commodities like gold. Okay, so that's my one big advice for tonight that you guys need to heed, because if you don't, you guys will be missing out on the gold and silver run. Okay, but like I said, nothing that I say is official financial advice, since I am not a official registered financial advisor. But gold and silver is, like I said, conventional vehicles to get into, especially if you want to have a safe haven and if you want to continue to invest in a recession, right? But once the recessionary fears have settled, and then dust kind of settles, and people are stopped, having a lot of fear in the equity markets, I would say you need to start building up equity positions on different companies and maybe even ETFs, especially ETFs, and start dollar cost averaging into them as well, because recessions are a perfect time to start building up an investment portfolio, right? So that's the reason why I'm coming up with my What to Invest in book. If you guys take a look at the description box below, you guys can pre-order a book. And I tell you guys which companies. So in this book, I'm basically doing research, all the fundamental and technical research on individual names that I want you guys to invest in, especially when these companies are getting very, very cheap in share price, which also means very, very cheap in valuation, right? Valuation or market capitalization. So, if you guys want to pre-order the book, you guys can right now. It's in the link in bio below. If you guys can't see it, just take a look at my website, chartsfocus1.com. But it's the very first link. You guys can pre-order What to Invest in guide right down in the description box below. The book is coming out by the end of June, right? By the end of June. Okay, so it's been a long time coming, but I want to release the book at a perfect time, especially when there's so many recession fears, right? Because people need to realize that, actually, people tend to fear a recession, and they start to taking out money out of stock market, right? I mean, that's obviously a good way to, kind of protect yourself from a sell-off, because initially, when recessionary fears hit, the market just dumps, right? It just absolutely dumps, and people, don't want to get stuck in that dump. So what people will do is they initially sell even before a recession has been called, right, by the economy, right, without even seeing economic data or I'm having a brain fart here, guys. 2 back-to-back quarters of an economic slowdown, right? So, even before seeing any type of economic data that corroborates 2 quarters of a slowdown, people will start selling, and we're already seeing that. So, in order to kind of prepare to build up positions on worthy companies for the long term, right? You guys will want to get this guide, which is coming out in June, because I go over companies, specific companies that you guys might want to start building up positions in, right? And it's interesting that what kind of companies that are out there that are actually valuable, right? Actually profitable, or maybe not even profitable, but they are worthy of becoming profitable in the future, right? And that's exactly what we want to invest in, right? Companies that are growing, right, with immense amount of volume of value, and companies that are fundamentally strong even during a recession, right? So that's exactly what this book is about, what to invest in, right? So if you guys want to pre-order, it's in the description box below, the very first link, right? And it's coming out by the end of June, maybe beginning of July. I'm trying to take this and release this book at the right timing so that people are able to, kind of save their cash and really start building in positions at a time when the market is showing really deep value for certain names that are in the book, because if you're in a recession, that means all the most of the companies that are public in the stock market are going to be very, very cheap, right? And I want to release the book when those certain companies that are in the book are cheap, right? I want to make sure that people are able to read the book and then start adding positions, right, into their portfolio, or maybe even begin a new portfolio using my book, right? So I want to make sure that the timing is perfect when I release this book. So I would say by the end of June is kind of the rough estimate. But if I don't like the timing for the end of June, I would say early July. Maybe the first 2 weeks of July might be a good time frame there. But like I said, guys, if you guys want to know what to invest in during a recession, so that you guys can start building up a position for the long term, decades down the line, make sure you guys get this book. You guys can pre-order right now using the first link below in the description box. Okay. All right, so that's it for tonight, guys. We're hitting that 30-minute mark, but like I said, I really want you guys to start learning trading and investing. So if you guys aren't in the CFA Swing Watch, right, I am still doing a sale of 40% off, right, on tiers 3 and 4. I have 4 different tiers, right, and I also have a trial, right, a trial membership for 2 weeks, right? So if you guys want to join us today, you guys can use the trial membership, or you guys can join us right away before the new trading week starts next week by using the 40% off code. So if you guys want to know what the 40% off code is, okay, here it is. I'll put it in the chat here. Okay, right there. Okay, here is the 40% discount. And if you guys don't know where the link is to subscribe to the CFA Swing Watch, it's the second link in the description box below. Okay, so make sure you guys use this discount code, because, well, I mean, why not? All right, I'm giving it to you guys. All right, 40MD. All right, so if you guys want to pre-order the book, What to Invest In, which should be coming out by the end of June or early July, get the book now and pre-order. Or you guys can also subscribe to the CFA Swing Watch. And if you guys use the 40% discount, if I see that you guys use this 40% discount, I will give you my beginner's trading guide for free. Right? I've been doing that for multiple people, and 5 people right now have done that so far. Right? 5 people. Okay. And also, if you guys are one of the 5 people who have joined the CFA Swing Watch, 3 of you have not joined the CFA Discord. So make sure you guys DM me on Instagram or message me on email, right? Through email. So email me because you guys have to join the CFA Discord. If you guys don't want to, that's fine. That's your choice. But 3 of you guys haven't joined the CFA Discord. So make sure you guys email me or message me on Instagram so that I can share the Discord, the private Discord link to you all. Okay. But guys, like I said, if you want to join the CFA Swing Watch and get the beginner's trading guide for free, use the 40% discount. I will be able to see that you guys have used the 40% discount. Okay, so the 40% discount code is 40MD. MD is capitalized. All right, but I believe you guys don't have to capitalize the M and D. It will still work anyway since it's just letters, M and D. So it's not case sensitive. All right, but yeah, so that's it. All right, so if you guys want to join before the new trading week starts next week, join us tonight. All right, and hopefully I'll see you guys by tomorrow morning or by tonight. Okay, thank you all for joining. I hope you guys learned something, especially for the long term, because I really want to tell you guys and make sure you guys know and prepare for the long term journey ahead and what's in store for us in the stock market. Okay, so hopefully I'll see you guys in the next live, which should be on Tuesday. Okay, so join me on Tuesday at 8:30 p.m. Pacific Standard Time. Okay, thank you all so much for joining, right? And hopefully I'll see you guys in the CFA Swing Watch, or hopefully I can see that you guys have pre-ordered the What to Invest In guide. Have a great rest of your weekend and have a great rest of your night. Thank you all for joining and liking the video.
There were no more flowers on the lamppost. Bliss to be alive. Bliss to be alive. With flowers on the lamppost. Bliss to be alive. Bliss to be alive. With flowers on the lamppost. Bliss to be alive. Bliss to be alive.